In this video, I'm going to show you something that I wish I had when I was learning to trade. This is something that will genuinely help you to learn to trade quicker and more effectively, get tons more data about your trading performance to help you test and optimize your system, and it even means you can trade over the weekends rather than having to count down the hours until the markets open. Hey traders, it's Nicholas here. Back when I was learning to trade, I made loads and loads of mistakes. But one of the most expensive mistakes was my not so smart idea to learn using live trading accounts. You see, when I burnt out the first account and lost some money, rather than realizing that that's a sign I shouldn't be using my real money yet, instead I just saw it as an incentive to try and use another live account and try and earn that money back. It was this painful cycle. You see, the problem with learning with a live account isn't just that you're risking your hard-earned money either. When you're trading in the real markets, it can take a while for trading opportunities to appear. Now, if you're already consistently profitable, you'll be okay with that because you know what you're waiting for. But when you're still learning, you think that you should be more active. So you start forcing things. The outcome, of course, I was over trading all of the time and therefore burning out accounts. Of course, one option is to use a demo account, so at least you don't lose your real hard-earned money. But again, you're still spending your time waiting around and you'll get drawn into overtrading. In fact, when you're learning, you want to be experiencing as many different things as possible. So if you're waiting at that stage in your development, it's going to be a waste of your time, especially if you're an enthusiastic learner who just wants to do as much as you can and get ahead as quickly as possible. So the usual alternative, if you want to go through lots of different scenarios and trade lots of different setups in a short space of time, is to do backtesting, to go back on your chart and replay moments bar by bar. The problem is, it doesn't really replicate what happens in a real trading situation. It might be good for practicing some things, but it also misses a lot of important factors. It's a bit like the difference between running set pieces drills in training compared to playing in a proper match. So what can you do instead? Well, our members and I have fallen in love with an alternative solution that's really effective, and that is to use a trading simulator. Trust me, it sounds simple, but it's a complete game changer. You see, a simulator uses real market data and lets you go back in time to trade markets as if you were trading them live. You can open and close trades, scale in, scale out, place stop losses, take profit levels, whatever you want. Basically, all of the things that you would normally do with your live trading. Of course, there are some things that a simulator can't replicate from the live markets, such as a lot of the psychological pressures and things like that. But this is overshadowed by the huge amount of benefits to your development that other options just can't provide for you, which is exactly what I'm going to explain to you. So let's go through the pros and cons of using a simulator so you can see why it's something that I recommend that you start using. And I'll also share with you the preferred one that me and our members use. And then in future videos, we can get into more details about practical development techniques that you can use the simulator for. The first huge benefit of a trading simulator is that you can slow down or speed up time, as well as actually rewinding it if you want to replay something again. Now, this makes it perfect for deliberate practice, which is the gold standard for skill development, because it offers something that the live markets can't do. You see, most literature on deliberate practice says that when you hit a plateau in your development, you need to find creative ways to overcome it. Sometimes this would involve slowing the skill down to give yourself more time to think through the steps. But in the live markets, we can only really go at one speed, can't we? Normal, real life, linear time. Boring. And you know, it's not just when we want to slow things down either, because sometimes we actually want to speed things up. There are two good reasons for this. The first is to make it more challenging and give yourself less time to make decisions. That way you can adapt to a more intense situation, so you'll deal much better with the real markets as they'll feel slower paced and less pressurized. And the second is to be able to actually fast forward to the next opportunity rather than having to waste time waiting around for something to happen. This means you can experience more things in a shorter amount of time and develop much, much quicker. And speaking of developing quicker, this also means that you can trade over the weekends. When I was learning to trade, I absolutely hated the weekends because it felt like my progress was being forced to slow down. There's only so much I could do with the markets being shut. But if you have a simulator, you could literally trade night and day all weekend if you wanted to. There's no need to stop, unless of course you need a break or you have some sort of social life. But this all ties in with the next benefit, which is that it runs just like a normal trading account. So unlike when you do backtesting, this will actually track your trading over time so you can see how you're really performing. You don't have to do paper trades or keep notes of what trades you would have opened or closed. You can just trade as you normally would and start developing properly. And by doing this, it means you're collecting data, which you can then use to optimize. You can then test systems. You can see if you're really ready to move on to the next stage and start trading in live markets. You can see how consistent you've been, what your drawdown would be, and so on. You know, there's often a problem with new traders when they feel like they're ready to move on to a live account, but they just don't have a big enough sample size of trades that they've opened to know if they're consistent or not. And then a lot of the time people jump into the live markets too soon and they don't realize they weren't ready. So by collecting data on a simulator, this can back up the trading that you're doing in live markets so you can get much more clarity about the stage that you're really at. And finally, one of the most important things for being a complete trader is to experience as many different types of market activity as you can. Now, most traders will develop this over many years when they start to be a market veteran. They've seen different market events, different cycles taking hold. But if you have a simulator, you could literally just create a list of all the different sorts of events that you want to experience and then go back in time and trade them. Want to know what it's like trading the financial crisis? No problem, travel back to 2007 and 2008 and start trading. So as you can see, using a simulator rather than live or demo accounts or backtesting helps you to fit a huge amount of learning and experience into a very short space of time. Unfortunately though, if you're thinking that it sounds too good to be true, well, there are some downsides as well. So let's go through some of those. But quickly before that, I just want to ask, if you're finding this helpful so far, please do hit the like button to support the channel. I really do appreciate it. Let's get back to it. Okay, so everything sounds great so far, but what are the downsides? Well, the first is about how real it actually is. I mean, sure, the mechanics of it might be exactly the same as normal trading, but psychology plays an important part in our success as traders. As I say in the video that you can click up here to watch, psychological problems are the biggest cause of issues with people's trading. So simulated trading does replicate some psychological factors, but definitely not all of them. The feeling of having actual money at risk can really play on people's minds and change the decisions that they make. And of course, you can't get that in simulated trading because it's not real money. So that means that you can't go straight from trading on a simulator to trading in the live markets and think that it's going to be exactly the same. You'll still need to ease yourself in and adapt to real trading as well. Now, a big part of this involves the second negative thing, which is that with a simulator, you can get a bit too used to being able to fast forward when nothing's happening. So this isn't going to help your ability to be patient in the live markets. They may end up feeling too slow and boring, which could then lead you to forcing trades and over trading, and then you're back to square one. It can also be the case that if you're collecting data on your performance or your trading system, you're testing it, that it may be too easy to rush through the analysis and end up opening trades that you wouldn't normally open if you'd spent more time thinking it through. So this could lead to bad habits being developed in your analysis process as you're going too quickly rather than being meticulous about it all. You also tend to see this in people's trade journals. Like if they're trading a demo account, they'll maybe keep a write-up of all of their trades, which gives them a detailed learning opportunity and a chance to reflect on what they've done. But with simulated trades, you just don't see people treating them with the same level of commitment when they're documenting how the trade went down. The next downside is that your development will be heavily focused on explicit learning and you'll lose the opportunity for a lot of implicit learning that's really important for trading and that you would usually develop in the live markets. This is something we won't go into too much detail about now because we'll be discussing it in an upcoming video in a lot more detail, but it's something that's really important for being able to trade at your best. So make sure you're subscribed to the channel so you don't miss that video. It is coming soon. And finally, the last negative aspect is that it costs money. I haven't seen any simulators that are free, at least not good ones, and for some people the price tag may be a little bit on the expensive side, but honestly, as an investment into your development as a trader, it's really a no-brainer, and from that point of view, I think it represents quite good value for money. Now, our members have researched lots of different simulators, and the one that they found to be the best, which is now also the one that I recommend and that I use for myself, it costs around $99 for lifetime access. Now, this video is not sponsored by them or anything like that, but we do have a link in the description box if you want to buy it. It's called Soft4FX and it runs in MetaTrader 4, so it's just like a usual trading terminal. I personally haven't got any complaints with it, other than maybe the fact that you can only focus on one market at a time, although that could actually be seen as a positive thing as well. But feel free to shop around, do your own research if you want to, find the simulator that works best for you. But if you want my recommendation, the link is in the description box. So unfortunately, the downsides to using a simulator do mean that you'll still have to learn using the live markets as well, so it's not something that can replace them entirely. But if you use it alongside your live trading, whether that's on a demo account or a live account, you will be able to develop at an accelerated rate that wouldn't be possible otherwise. Our members that use simulators have seen huge amounts of progress, and it also means they could trade the live markets during the week and stay on track with that side of things, and then address or fix any issues that they come across on the weekend in a simulator session. I know that that's the sort of approach that would have been a total game changer to me when I was learning. At the end of the day, when you're learning to trade, you need to grab any advantage you can, because there are proven reasons why trading is more frustrating than learning most other skills. If you want to know why that is and how you can offset those frustrations, check out this video over here. And if you're thinking of getting started with a simulator or you already are using one, please let me know about it in the comments. Hit the like button if you found this video helpful. Thank you so much for watching, and I will see you in the next one. Take care.